Are you making costly mistakes with your mortgage? Throwing away thousands of dollars without even knowing it. Today, I'm breaking down the biggest mortgage mistakes you must avoid to keep more money in your pocket. Let's dive in. Mistake number 1, not shopping around for lenders. It's easy to go with the first bank you think of, especially if it's the one you already have an account with or the one that's closest to your home. Convenience can be tempting, but that's a quick way to potentially lose money. You might end up with higher interest rates or less favorable loan terms. Getting a mortgage is a competitive business, and lenders want your business. They are willing to offer better rates and terms to attract you. By shopping around and comparing interest rates and loan terms, you can negotiate a better deal. This means looking at different types of lenders, including banks, credit unions, and online lenders. Even a small difference in interest rates can add up to tens of thousands of dollars over the life of the loan. For example, a 0.5% difference in interest rate on a $300,000 mortgage can mean a difference of over $30,000 in interest payments over 30 years. Talk to at least 3 to 5 different lenders, including both large and small institutions. Each lender may offer different rates and terms, and some may have special programs that could benefit you. Get quotes, compare them, and negotiate. Don't be afraid to ask for better terms or lower rates. Remember, this is a significant financial decision, and taking the time to shop around can save you a substantial amount of money in the long run. Be diligent, do your research, and make sure you're getting the best deal possible. Mistake number 2, skipping pre-approval before house hunting. Getting pre-approved for a mortgage shows sellers you're serious and gives you a clear picture of what you can afford. It involves handing over financial documents to a lender who will then tell you how much they're willing to lend. Having pre-approval saves you from potential heartache and puts you in a stronger position when making an offer. Sellers love to see pre-approval because it means you're not a financial risk. Get pre-approved before you start house hunting. Mistake number 3, picking the wrong mortgage type. The most common types are fixed rate and adjustable rate mortgages, each with pros and cons. Fixed rate mortgages have predictable monthly payments, while adjustable rate mortgages can change over time. ARMs usually start with a lower interest rate but can increase after the introductory period. Choosing the right mortgage depends on your financial situation, goals, and risk tolerance. Talk to a qualified mortgage professional to help you choose the best fit. Mistake number 4, getting blinded by the interest rate and forgetting the bigger picture. Many homebuyers make the critical error of zeroing in on the interest rate alone, thinking it's the only factor that matters. But in reality, the interest rate is just one piece of the puzzle. There are other costs like closing costs, mortgage insurance, property taxes, and homeowners insurance. These additional expenses can significantly impact your monthly payments and the overall cost of your mortgage. For instance, closing costs can range from 2% to 5% of the loan amount, which can add up to thousands of dollars. Compare the total cost of each mortgage offer, not just the interest rate. It's essential to look at the big picture and understand how all these costs add up over time. A mortgage with a slightly higher interest rate but lower fees might end up being more affordable in the long run. Look at the loan estimate provided by each lender, which breaks down all the costs. This document will give you a clearer understanding of what you're actually paying for. Pay close attention to the itemized list of fees and charges. Compare the APR, which gives a more comprehensive picture of the total cost of borrowing. The APR includes the interest rate as well as other costs like broker fees, discount points, and some closing costs, providing a more accurate reflection of the true cost of the loan. Knowledge is power, and it can save you a ton of money. By understanding all the components of your mortgage, you can make a more informed decision and potentially save thousands of dollars over the life of your loan. So, don't just focus on the interest rate. Consider the entire financial picture to ensure you're getting the best deal possible. Mistake number 5, forgetting to get rid of private mortgage insurance, PMI, once you've built up enough equity. PMI is required if you put down less than 20% of the home's purchase price. It's an extra monthly payment that can add up over time. Once you reach 20% equity, you can request your lender to cancel PMI. Many homeowners forget or assume it will automatically fall off. Be proactive and contact your lender to request PMI cancellation. Mistake number 6, overextending your budget. Just because you qualify for a certain loan amount doesn't mean you have to max it out. Your mortgage payment is just one piece of your overall financial puzzle. Stretching your budget too thin can put you in a financially precarious position. Create a realistic budget and figure out how much you can truly afford to spend on housing each month. Keep your total housing expenses to no more than 30% of your gross monthly income. So there you have it, folks, the 6 biggest mortgage mistakes to avoid if you want to keep more money in your pocket. These mistakes can cost you thousands of dollars over the life of your loan, so it's essential to be aware of them and take proactive steps to avoid them. By steering clear of these pitfalls, you can achieve financial freedom and make your home buying experience a positive one. Remember, buying a home is one of the biggest financial decisions you'll ever make, and it can be both exciting and overwhelming. That's why it's crucial to do your research, ask questions, and make informed choices. Take the time to understand the terms of your mortgage, shop around for the best rates, and don't be afraid to negotiate. Avoid these common mistakes, and you'll be well on your way to mortgage success. If you found this video helpful, smash that like button, share it with friends, and leave a comment below with your own tips or experiences. Your feedback helps us create better content for you. And don't forget to subscribe to House Finance HQ for more tips that could save you thousands. We cover everything from mortgage advice to budgeting tips, investment strategies, and more. Stay tuned for our next video where we'll dive into the best ways to improve your credit score before applying for a mortgage. Thanks for watching, and happy house hunting!